Home prices in the majority of US housing markets have now officially fallen. In fact, according to John Burns Real Estate Consulting, 98 of 148 real estate markets have seen a decline from their peak in 2022. And these declines are driven primarily by the continued affordability issues that we're having across the country, with both sky-high interest rates and home prices that are just off the charts. But home prices are not the only thing that are cooling down. So is demand. Buyers are canceling home contracts left and right across the country, but two markets in particular are being hit the hardest. And both buyers and sellers really need to be aware of the changes that are happening so they can position themselves best in the market moving forward. So make sure you stick around to the end of the video so I can walk you through exactly what's happening and which two markets these are. All right, guys, so let's get into this article from Forbes titled "Home Prices Are Falling in These 98 Major Housing Markets, and Only 50 Markets Remain at the Peak." Not long after mortgage rates spiked this spring, the US housing market slipped into what the industry likes to call a housing recession. It means housing activity levels, like home sales, are contracting sharply. That's hardly surprising. History tells us an inflation-fighting Federal Reserve means a so-called housing recession is right around the corner. So I find it really interesting how the narrative has shifted over the past few months, with experts now really accepting that we are in some sort of correction or housing recession. And this tune was very different just a couple of months ago. I think it's still really unclear how far prices are going to fall down, but this article actually gives us some really unique insight into what they think might happen here. Among the 148 major regional housing markets tracked by John Burns Real Estate Consulting, 98 markets have seen home values fall from their 2022 peaks. In 11 markets, the index has already dropped by more than 5%. Simply put, the US home price correction is sharper and more widespread than previously thought. So again, just confirms there that this really differs from what they were originally projecting. I don't know if any of you guys were following the Zillow projections for home values and home prices in 2022 and 2023. Just 6 to 9 months ago, they were still projecting, a 3 to 5% growth across the country nationwide. And since they've revised that a number of times to where it's just wildly different from their original projection. And, to be fair, I don't think a lot of people could predict exactly what was going to happen, of course. And with what we've seen with the Federal Reserve going into quantitative tightening mode, this has really put a dent in the housing market and let a lot of steam out of the bag with interest rates just rising so quickly. Our view is that you will see, and we're seeing it right now, home prices will fall even though supply levels are not ripping higher. And I think that's an interesting thing now, starting to surprise a lot of people. When the last housing cycle rolled over in 2005, home prices didn't fall until inventory levels skyrocketed. This time around, home prices are falling despite inventory levels still sitting 41.5% below pre-pandemic levels. How is that possible? Well, spiked mortgage rates coupled with record home price appreciation pushed the housing market to bubbly levels, and now buyers are pushing back. I think this piece is actually really interesting in that this is what sets this housing market crash or recession apart from what happened in 2008. If you remember, 2008 was driven by a massive amount of foreclosures where people just couldn't afford the mortgages that they were given because they really shouldn't have qualified for those mortgages. And so this ended up meaning that a lot of homes just came on the market all of a sudden, and the market just couldn't sustain it, and so it plummeted. So it's a lot different from what's happening today, whereas today it's more of a demand side issue where people just can't afford to buy the homes in the first place because they've appreciated so much, and then it's being exacerbated by the fact that interest rates continue to rise, and it's causing just a massive affordability crisis in the US. And taking a look at this chart right here, this is the number of active listings in the US currently. And you can see it's not spiking, it's not skyrocketing. I mean, currently we're sitting at a little over what we were in 2021, but we're not even close to where we were to the blue line here, which is 2019, let alone skyrocketing inventory levels, right? If it were skyrocketing, you'd probably see inventory levels even higher than 2019 or 2018, and we're just really not seeing that yet. And again, I think this all comes down to just the affordability crisis where even if people do want to move, they just can't. So inventory levels just aren't rising, I think, for really 3 key reasons. Number one is if you think about just the natural progression of the housing market cycle, people get into an entry-level home. After a couple of years, they have a family, they need a little bit more space, so they upgrade to a bigger home. Of course, they get a couple promotions, get a bigger bigger income, they're able to afford more and more home, so on and so forth. And this just keeps progressing over the course of, I think the average time a person owns one particular home is about 7 years. So on average, every 7 years, somebody's either moving to a different location or upgrading their existing home. But now with home prices appreciating 40, 50% in some markets just in the last year, people just can't afford to upgrade their home to that next biggest thing, because a lot of people just can't even afford to purchase the home. If they had to go out and purchase the home that they're living in right now, they couldn't actually go about and do that because of the prices are just too high. Also, when you think about the rise of work from home and remote working, people just don't have to pick up their homes and move anymore. So this is resulting in just a lot fewer transactions of people who get a job maybe across states or a couple towns over or across the country even, and they aren't being required to sell their existing home and go find a new one. And so you're seeing a lot less transactions also do that. And then finally, and probably one of the most important ones here is, the general population is really well aware that this housing market is a bubble. People know it's extremely overvalued. In fact, Redfin did a survey and 77% of Americans believe that the housing market they live in is currently in a bubble. So 2008 is still definitely top of mind for a lot of people, and nobody wants to get caught purchasing a home at the top of the market. Okay, so back to the article, let's take a look at what are the 98 markets that are experiencing declines. So you can see from this chart here, the darker red are the markets that are declining the fastest. And you can see a lot of these are coastal markets. Here, San Francisco, Santa Cruz, Monterey, LA, and California, of course. Seattle is definitely a big one up there. Phoenix, Houston, a little bit in Fort Lauderdale, Tampa, Nashville, and a little bit of decline here on the East Coast, but mostly contained in Florida, Nashville, a little bit in Texas, a little bit in Colorado. And then you're seeing a lot of other markets where we're seeing slower declines, closer to 2 or 3%, like Boise, you can see Iowa, Minneapolis. And I really think what's going on here is we have really two different types of markets that are experiencing declines right now. You have first the tech hubs. We're seeing big declines in these tech hubs because the NASDAQ and the tech industry as a whole has just been really hit hard recently. I think that, coupled with the fact that there's been a lot of out-migration of people, moving away from these extremely high cost of living areas throughout the pandemic, and then the fact that now there's a lot of remote work available, so where people can get, extremely high West Coast tech salaries living wherever they want to live, is meaning that there's a lot less demand for people to move into those really high cost of living areas. And then the second group of markets we have here are the bubbly markets from the pandemic, where the markets we saw a lot of influx of people moving into them, maybe lifestyle markets or just lower cost of living markets. And now that there's just a lot fewer people moving around, the people that wanted to move have already probably moved. And so there's just fewer people moving around into these areas. And also these areas have gotten extremely expensive now too. And so it's just not as desirable of locations to go in. So think Boise or Phoenix or Dallas, Houston, Nashville, these areas that were extreme hotspots during the pandemic are just not quite as attractive now because prices there have risen so dramatically. And then this paragraph here is really insightful. Peak to trough, Moody's Analytics expects US home prices to fall up to 5% this cycle. In significantly overvalued housing markets, they expect 5 to 10% declines. And this assumes no recession. If a recession manifests, then they expect national home price decline of 5 to 10%. And then in these significantly overvalued housing markets, they'd see home prices fall between 15 and 20%. Remember, take all this into context as well. With a lot of these markets, especially these, quote unquote overvalued ones, saw increases of 30, 40, 50% over the last 2 years. So even a 20 or 25% decline there is not going to take them back down to even what they were prior to the pandemic, but will definitely make it a lot more palatable, if you're looking to move to one of those areas. Now, if you remember at the beginning of the video, I mentioned that the affordability crisis is really affecting home values and home prices, and we're starting to see those decline. But on the demand side, we're seeing buyers really dropping out of the market, and we're also seeing the affordability crisis affect many buyers' ability to pay for these homes that they've already got under contract. And so we're seeing massive cancellations, and two markets are being hit the hardest in particular. Now let's take a look at this article from Zillow titled "More Pending Home Sales Are Falling Through, but No Need to Sound the Alarms." I think this last piece, the no need to sound the alarm, is, could be misleading, because I think depending on where you are on the spectrum, I think it's definitely time to start sounding the alarm. If you're a buyer, sound the alarm in the good way that it's a great thing, because the market has been a seller's market for so long, but now we're seeing a massive shift to where buyers have a lot more negotiating power and control. And so sellers should really be the ones sounding the alarm, not the other way around. So let's take a look at what the article has to say about it. There are a number of reasons why a pending home sale would fall through. Quickly rising mortgage rates were likely causing some buyers to move from being able to afford a mortgage on a home they bid on to not being able to afford that mortgage, as the cost exceeds their allowable limit for a debt-to-income ratio. Affordability is likely a major reason why contracts fail, especially as more lower-priced pending homes end up back on the market than other price tiers. And continuing, another cause of contract cancellations could be from buyers taking back control of negotiating power. Competition for homes has eased as many buyers have taken a step back from the market. Inspections and other contingencies are no longer being waived to the same degree as earlier in the pandemic. A failed inspection or any questionable findings might be leading to more contracts falling through now, while desperate buyers may have been more willing to go through with a risky purchase when competition was at a fever pitch earlier in the pandemic. So first, let's address that first point here. So you can see this is a chart that shows the breakout of homes by price tier. So lower tier here on the top, mid tier, and then top tier here at the bottom. And you can see that lower tier homes, so lower priced homes, on average are experiencing a lot more cancellations of contracts. And again, the reason for this is because of affordability. People are just not able to afford the homes that they're originally going under contract for. And then top tier here you can see is being much less affected by that. But again, as I mentioned, this is really a signal of the purchasing power and the negotiating power swinging back to the buyer. Buyers now can place a bid on a property and not have to give up all the contingencies like they were doing earlier in the pandemic. So again, if you're a seller here and if you're a buyer, you really need to be aware of what's happening in the market so you know how to best position yourself to win if you're buying or selling a home right now. And then let's get down to the actual markets that we're seeing the biggest declines here. So by far the two biggest are Salt Lake City and Dallas. So two of the markets that saw massive amounts of appreciation during the pandemic and saw huge numbers of people moving into those areas. And now we're just seeing a big shift in those markets. And we're also seeing home price declines in both of those markets. And then you can see here rounding out, a number of other markets. The vast majority of these here are, again, those same markets that were, not the tech hubs, right? But these are the lifestyle markets, the most bubbly markets that saw the most people moving into them during the pandemic. And again, you can just see here the power dynamic is just shifting. All right, guys, thanks for watching. If you appreciate the content, do me a huge favor, smash the like button and subscribe to my channel down below so you don't miss any more future content on real estate and finance. And if you want to see a video describing exactly why Zillow is claiming a housing market crash has begun, then click this video right here and check that one out.